WeWork is not working out. Now, where are we going to start? Let's start right at the beginning. WeWork faces delisting from the New York Stock Exchange after, according to Reuters, the stock closed below $1. Shares have dropped 65% year to date, and its market capitalization as of late Tuesday was $361 million, a far cry from the $47 billion valuation that it was set in 2019. There have been doubters of WeWork's ambitions. The short sellers have piled into co-working firm WeWork after it failed to turn a profit in its full first year in trading. As of December 2015, investors held a short position on more than 27% of WeWork's publicly traded shares. Of all the investors, I feel sorry for SoftBank. In January of this year, SoftBank, WeWork's largest investor and creditor, lent the company $250 million. A month later, it increased the size of the debt facility and postponed repayment deadline. SoftBank has poured $10 billion into WeWork since 2017. To understand the collapse, you need to understand the business model. WeWork leases out buildings, converts them into co-working spaces, and sells co-working time to startups and corporates. They are built and is reshaping the world environments, offering visually appealing co-working spaces at a slightly affordable price. If you're a startup founder and are tired of working from the garage, you and your team can take a hot desk at WeWork. These spaces are month to month, which gives NFT startups enough time for their pump and dump schemes to materialize and escape. They have co-working spaces all over the globe, with 726 open and coming soon locations across 119 cities, all the way from Perth to San Jose. Interestingly, they have the most locations in Greater China and America than any of the other countries. Now, this all sounds good and well until it was revealed that they were the masters of dodgy accounting and the IPO was the biggest downfall. Actually, Adam Neumann was the biggest downfall. Now, before an IPO, a company must submit the S1 filing. The document lists the company's finances and future plans. Usually, a company will seek outside help in putting together this document to ensure that it meets all the checks and balances required to go public. WeWork did things a bit different and chose to develop this document as they see fit. I always say, leave the experts to do what they specialize in. The company indicated in its IPO filing that losses have ballooned to more than $900 million in the first 6 months of the year, which follows a full year net loss of $1.8 billion in 2018, and an estimated $120 to $200 million burn per month. And burn is the cash burn, the amount of cash they're just burning each and every month. Now, the company signs long-term leases with landlords, which last up to 15 years, which requires it pays hundreds of millions of dollars in future rent. According to data provided by CV Insights, in the S1 filing, WeWork said that the future lease payments obligations were $47.2 million as of June 30th, up from a roughly $34 billion at the end of 2018. Puzzling corporate structure in Asia business. After WeWork rebranded to become the We Company, it adopted a complicated corporate structure called an Umbrella Partnership Corporation, or UPC. This turned WeWork into a limited liability company, with the WeWork Company or the We Company overseeing it and joint ventures in Asia, as well as other related entities, such as its fund, ARC Capital Advisors. An all-male board of directors, the We Company disclosed who will serve on its board of directors in its IPO prospectus. Not a single woman will serve on the company's 17-member board, which could potentially open it up to criticism later down the line. Dodgy leases. Complicating things, WeWork leases and pays rent on buildings owned in part by Neumann. He has ownership stakes in 4 commercial properties leased to WeWork, the S1 state. Between 2016 to June 2019, the company had paid $20.9 million to the landlords overseeing these leases, which in effect includes Neumann. Succession. Furthermore, should Neumann ever become permanently disabled or deceased, his wife Rebecca, who serves as the company's chief brand and impact officer, is one of 2 people who can choose his successor. If 2 pre-selected directors are no longer serving on the board, Rebecca can also select which board members will assist her in the selection process. So who is Adam Neumann? Adam Neumann is an Israeli-American billionaire businessman and investor who co-founded WeWork with Michael in 2010. He served as CEO of WeWork from 2010 to 2019. In September 2019, he resigned as CEO of WeWork after the company's IPO was postponed and its valuation dropped from $47 billion to $8 billion. Adam Newman talked the talk. He used every conceivable buzzword in tech history, and this won over many investors, and they just kept throwing money at him. But in the meantime, the company was hemorrhaging cash and hoped that by opening new locations, the cash problems will sort themselves out. WeWork faced intense scrutiny of its finances and leadership from investors and the media after it publicly filed its IPO paperwork in August of 2019. The company was hemorrhaging cash, and its then CEO, Adam Newman, was accused of using WeWork to enrich himself. The IPO was postponed, its valuation dropped from $47 billion to $8 billion. You have to feel sorry for SoftBank. They have been pouring money into WeWork. Since 2017, they poured $10 billion into WeWork, and WeWork is now valued at $361 million. It would have been better for SoftBank to just put that money under a mattress and hope for the best. So what's next? What's next for WeWork? Well, first, we need to understand what's next for Newman. So Adam Newman never returned to WeWork after he was ousted in 2019. He resigned from WeWork, and then Adam and his family reportedly went to South America and then spent some time in Israel. They traveled with a routine of helpers and security personnel and eventually returned to the USA in May of 2020. As of 2022, his work largely revolves around property investment. Fun fact, A16Z, one of my favorite companies, absolute favorite, and they're regarded as one of the best venture capital firms globally. They have sunk $350 million into Newman's latest project called Flow, reportedly its largest ever check to a single company. So what's next? What is next for WeWork? What will happen to WeWork? With interest rates ever increasing, working from home being an everyday reality, venture capital drying up, ever increasing long-term leases, the business case for WeWork is no longer as compelling as it once was. It will be tough for them to survive if they do.